Most people wait for comfort before they move. Serious capital usually does the opposite. It moves when structure improves faster than sentiment. By the time the crowd says now it feels obvious, the most informed money has often already entered, negotiated, or repositioned. This is why headlines in markets so often appear out of sync. Headlines are rearview mirrors. Capital is a forward instrument. After major market disruptions, this pattern repeats with almost mathematical discipline. The public waits for emotional clarity. Capital looks for structural discount. Public opinion asks, how does everyone feel? Capital asks, what is being misread? Baron Rothschild's famous line, "The time to buy is when there's blood in the streets," is quoted so often that people forget its real meaning. It was never a celebration of chaos. It was an observation about timing. Perception breaks first, pricing reacts second, and those who can distinguish noise from structural truth often move before the mood turns. That logic applies to cities as much as to assets. When capital studies a market, it is not only studying the temperature of the conversation, it is studying deeper instruments: population movement, transport expansion, business formation, regulatory stability, air connectivity, policy direction, and whether a city is becoming more useful to globally mobile people and companies. That is why public opinion and capital so often arrive at the same conclusion at different times. Dubai is a case study in that lag. In early 2026, the city crossed 4 million residents, reaching the milestone years earlier than some long-range projections had expected, while tourism reached 20 million international visitors in 2025, up 5% year-on-year. Those are not cosmetic metrics. They are demand signals. They indicate circulation, mobility, and relevance. And when demand signals strengthen before the mood fully settles, capital does what it has always done. It moves first and explains later. Warren Buffett put it in a softer form: be fearful when others are greedy and greedy when others are fearful. The line survives because it understands a permanent truth about markets. Confidence is often most expensive when it is most visible. So the real question for any investor is not, when will people feel better? The real question is, what is becoming structurally true before people fully admit it? Original quote style line: public opinion buys comfort. Capital buys conviction before comfort has a price tag.